In today's fast-paced financial landscape, SoFi Automated Investing stands out as a notable option for those looking to begin their investment journey. Whether you're a seasoned investor or just starting out, SoFi presents an attractive offering with its user-friendly platform and unique benefits. Unlike many competitors, SoFi Automated Investing charges no annual management fees and provides access to financial advisors at no additional cost. This combination can be particularly appealing for those looking to maximize their investment potential without hefty fees eating into their returns. However, before jumping in, it's essential to understand how SoFi makes money from its services and whether its offerings align with your investment goals. SoFi Invest is an excellent choice for individuals who have previously engaged with SoFi through loans or use its SoFi checking and savings account. For those new to the company, SoFi Invest is particularly appealing to beginners seeking a low-cost robo-advisor that still offers access to real-life financial advisors. Unlike many other platforms, SoFi allows you to start investing with as little as $1, making it accessible for anyone looking to dip their toes into investing. However, it's crucial to weigh the pros and cons and consider how SoFi's services compare to more established investment firms. SoFi Invest is divided into several services, including active trading, retirement savings, cryptocurrency trading, and automated investing. For those interested in a hands-off investment experience, the automated investing option is the way to go. After selecting this service, you'll decide between a tax-advantaged individual retirement account or a taxable investment account. SoFi offers a traditional IRA, Roth IRA, or SEP IRA, which is particularly beneficial for small business owners. SoFi Invest assesses your risk tolerance by asking basic questions about your investment preferences. While their approach is standard, it may not be as thorough as other platforms like Vanguard Digital Advisor, which uses interactive tools for a more comprehensive assessment. After evaluating your risk profile, SoFi Invest recommends a portfolio tailored to your needs. If you have any questions, SoFi provides access to financial advisors to assist you in making informed decisions. SoFi Invest places your money into a diversified portfolio of exchange-traded funds based on your risk tolerance and investment timeline. When Forbes Advisor evaluated a sample account for a 35-year-old investor with a moderate risk tolerance and a 5 to 10-year investment horizon, SoFi Invest recommended a portfolio consisting of 80% stocks and 20% bonds. However, like some other robo-advisors, SoFi tends to include an excessive number of ETFs, which may not be necessary for proper diversification. Many of the ETFs in SoFi's portfolio come from reputable providers like Vanguard and BlackRock, known for their low expense ratios. However, SoFi also includes its proprietary ETFs, such as the SoFi Select 500, ETF, and SoFi Next 500. While these funds initially have low or no expense ratios due to waivers, the costs could increase once the waivers expire, potentially making them more expensive than similar funds from established providers. Smaller funds often charge higher fees due to fewer assets under management, which could lead to higher costs in the future. Additionally, smaller funds are at risk of closing, which can disrupt long-term investment strategies and result in taxable gains. Therefore, investors should carefully consider whether they believe in SoFi's growth potential before entrusting their savings to SoFi Invest. SoFi Invest provides access to no-fee financial advisors who operate as fiduciaries, meaning they prioritize your financial interests over sales. However, availability can be limited, with potential wait times to schedule a call. For investors interested in active trading, SoFi also offers taxable brokerage accounts, which is a feature not commonly provided by startup robo-advisors like Betterment and Wealthfront. While active trading can be a useful addition, it's important to remember that robo-advisors are designed for long-term, diversified investing, not short-term speculation. SoFi Invest's primary selling point is its lack of an annual management fee. This feature makes it highly competitive compared to other platforms. For example, Vanguard Digital Advisor charges around 0.15% of assets under management, while Ellevest's cheapest tier costs $12 annually. Additionally, many competitors charge extra for access to financial advisors, whereas SoFi includes this service at no additional cost. However, the absence of a management fee does not mean SoFi Invest is entirely free. The platform may include its proprietary ETFs in your portfolio, which could incur higher costs once expense ratio waivers expire. SoFi's proprietary ETFs, such as SoFi Weekly Dividend ETF, SoFi Weekly Income ETF, SoFi Gig Economy ETF, and SoFi Social 50 ETF, charge higher fees compared to standard passively managed ETFs. The standout advantage of SoFi Invest is its lack of fees. With no advisory fee, you can reinvest those savings and accelerate the growth of your wealth. Access to financial advisors is a valuable benefit, allowing you to receive professional guidance without incurring additional costs. Getting started with SoFi Invest is simple, as there's no minimum account requirement, and you can begin investing with just $1. Additionally, SoFi offers a no-fee SoFi checking and savings account with competitive annual percentage yields on checking and savings, provided you meet specific criteria. These offerings may be appealing to investors seeking a comprehensive financial solution. While SoFi Invest has numerous benefits, there are also some drawbacks to consider. Young investors might be drawn to SoFi's intuitive interface and lack of fees, but they should be cautious about SoFi's proprietary ETFs, which could incur higher costs over time. The relatively low assets managed by these funds might lead to increased fees in the future, impacting long-term returns. Furthermore, SoFi Invest doesn't offer a complete financial plan, which might limit its effectiveness for those with complex financial goals. Unlike more comprehensive offerings from Vanguard Personal Advisor Services and Personal Capital, SoFi lacks strategies like tax loss harvesting, which could help minimize taxes on capital gains. Additionally, SoFi's taxable accounts may not be the most tax efficient for certain asset allocations, potentially leading to unnecessary tax liabilities. SoFi Automated Investing offers an attractive entry point for new investors with its low barrier to entry, absence of management fees, and access to financial advisors. However, investors should carefully consider the long-term implications of SoFi's proprietary ETFs and weigh their costs against potential benefits. While SoFi provides a user-friendly platform for beginners, more experienced investors, or those seeking comprehensive financial planning may find greater value in other platforms with a proven track record and more robust offerings. Alright, so I believe that's pretty much it for this video. If you find it helpful, consider subscribing and giving this a big thumbs up, and I'll catch you in the next one. Thanks.